way. Monday to Friday at 12:30 p.m. only on BloombergQuint.
Good morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agam Akil. First, the headlines. India's consumer price inflation rises 7.35% in December. This is the highest level since July 2014. The Competition Commission of India's investigation wing will probe online retailers Amazon and Flipkart over alleged anti-competitive practices in the form of deep discounts and exclusive tie-ups. The Securities and Exchange Board of India defers its decision for listed companies to split the role of chairman and managing director by 2 years to April 2022. The government will now probe claims seeking GST refunds worth 28,000 crore rupees in order to curb fraud, as per the government official. And IndusInd Bank, along with Wipro, will be the two nifty companies reporting their earnings for today. And well, starting off with the U.S. markets, they ended gains during Monday's trading session. The S&P 500 and the Nasdaq saw a record closing high, while the Dow Jones underperformed. Investors are now looking forward to the signing of the Phase 1 deal between the U.S. and China. And Ranita Young of Bloomberg News wraps up the Monday's Wall Street action in this report.
U.S. stocks closed higher on Monday as the S&P 500 broke through yet another record, all happening as U.S.-China trade is in focus during an earnings week for big banks. The U.S. and China are set to sign Phase 1 of a partial trade deal on Wednesday. During the session, we saw the U.S. dollar a little bit higher versus some major currency competitors, and gold was lower. Meanwhile, Apple, Tesla, and Microsoft led the Nasdaq higher, and earnings will take spotlight with JP Morgan, Goldman Sachs, and Morgan Stanley. That's a look at your Wall Street action on Monday. In New York, I'm Ranita Young for Bloomberg News.
Well, moving on to Asian markets, let's see how they are faring. We have Rosalind Chin live from the Bloomberg studios in Hong Kong. Rosalind, good morning.
Good morning. Well, certainly we're seeing a fair bit of green on the board this morning. And, you know, what's not to like today? We've got some positives driving forward. China was taken off the U.S. list designation as a currency manipulator. The Phase 1 U.S.-China trade deal is set to be signed tomorrow. We've got Raphael Bostic among the Fed presidents who've recently come out saying that the U.S. economy is in a good place. Pretty much quite a few things to be cheering today, and investors have been taking the lead from Wall Street. The MSCI Asia Pacific Index is making gains of 0.4% right now. Japan back in the mix after a one-day holiday yesterday. Nikkei 225 up by 0.7% right now. It's about 1.7 or a little bit less away from 1991 highs we're looking at right now. We've also got the Japanese yen that is weakening as demand for havens declines. Of course, a bit of more risk on coming back into the market, falling past 110 per dollar for the first time in about 8 months, and it could have further to go. But right now it's at 110.06 to the US dollar. The offshore yuan holding on to gains that it made on Monday. Hang Seng Index here in Hong Kong opened a short time ago. It's up 0.5%. The Shanghai Composite making gains of about 0.28% right now. Taiwanese markets opened with stocks at a 30-year high. That's following the election on the weekend. Business is back as usual for the Philippine Stock Exchange after a one-day closure due to a volcanic eruption south of Manila. Government offices, though, will remain closed in the Philippines. And we're looking at the Hang Seng Index back at levels before protests began last year. So all in all, a pretty positive day. In Australia, the S&P ASX 200 is making gains of 0.75%. Lithium miners among the big gainers there after China said it was not going to cut subsidies further for electric vehicles. And so that we'll see some bonuses there for companies such as Pilbara Minerals, that's up by more than 5%, and also Orocobre, that's up by a whopping 9%, the best performer, in fact, I'm looking now today on the S&P ASX 200. And finally, finally, though, there are some clouds on the horizon, of course, and that could come in the form of corporate earnings, which are going to be up and coming. We are seeing some forecasts indicating that those corporate earnings could show, in fact, the smallest growth in 3 years. So we are watching for those. Nissan here in Asia hitting a 52-week low, and that is on reports that it could be re-examining its ties to Renault in the weeks and months to come. Back to you.
Right, Rosalind, thank you so much for getting us those updates from Asia. But ahead of the signing of the Phase 1 deal between the US and China, the US is lifting its designation of China as a currency manipulator. The US Treasury says that China has made a commitment to not devalue the yuan any further, removing any other obstacles between the two companies. Sarah McGregor of Bloomberg News has more details.
It is a symbolic title, or the manipulator status. You know, we didn't really see any sort of specific action take place after the Trump administration, you know, put that label on China, except to heighten tensions, of course, in its trade war. But by removing it, I think it's a more significant move. It really recognizes the fact that within this trade deal, the two countries have said that they've agreed to a currency pact where China will not engage in competitive devaluation of its currency. And so, you know, I think it sort of signifies the real commitment from China and appeases the U.S. concerns about any manipulation that may happen, whether it was real or sort of politicking from the U.S. side.
Sarah, my question, though, would be there have been a lot of criticism over how enforceable this Phase 1 trade deal will be. So why not use this designation as leverage? Why lift it so soon?
Well, I think, as I alluded to before, you know, a lot of analysts, people who follow the, you know, currencies closely, had thought that perhaps the Trump administration really had, almost for political reasons, named China a currency manipulator to begin with. It didn't really meet the three sort of stringent set out criteria by the Treasury Department. And its announcement of China as a currency manipulator was out of cycle from the regular review of all countries that the U.S. looks at to see whether they're manipulating their currencies or not. And so, you know, I think, again, this is really just a move from the U.S. side. It's sort of a gesture of goodwill, if you could say. And as they move towards a Phase 1 deal, it was probably something, you know, that China demanded in the talks. These weren't one-sided talks, and China really wants to show, you know, its own people that it got some concessions out of the U.S., and this is one that they can definitely hold out as that.
And Howard Marks of Oaktree Capital believes that this is not the good time to be investing in. In an interview to Bloomberg Television, Marks cited the prolonged bull run as one of the key reasons why. Listen in.
The market's been up for 11 years. It's quadrupled off the low. We're in the longest bull market, the longest expansion in history. Profits are not rising. Stock prices are. It's what we call a liquidity-driven rally. That means it comes from people having a lot of money to spend. If you put those factors together, it doesn't mean that the market's going to go down tomorrow. But it does mean that the odds are not, in my opinion, in the investor's favor.
Is that to say that now is the time, Howard, to be a contrarian? Because as we both know, the economy is growing at a reasonable clip. Forecasters say the odds of a recession in 2020 have declined. Stocks, as we witnessed last week, brushed off, right, the threat of Iranian hostilities and surged to a new record. And of course, high yield spreads keep edging closer and closer to a new post-crisis low.
Right. Yes, well, the way I would phrase it, Eric, is that this is a time to have less risk than you did 3 or 5 years ago. You know, 3 or 5 years ago, we were here, and now we're here. All things being equal, if we're here, we should have less risk than here. And I don't know whether we're going to go over the cliff tomorrow or continue straight up to the sky. But the odds are less in the investor's favor, in my opinion, than they were 3 or 5 years ago.
Howard, I want to get to the substance of your new memo.
Yes.
You call it You Bet.
Yes.
Frustrated investors say the stock market is no better than a casino. Are they right?
Investing, as I point out in the memo, involves hidden information, luck, and skill. And the question is, how much skill does that investor have? If you don't have much skill, then you're down to luck and hidden information, and it becomes a coin toss. But if you have skill, you can perhaps have an edge. It's the difference between roulette and poker. Or blackjack. You know, a lot of people, there's a science to playing blackjack. There's books written about it. You can actually get good at it.
Bill Gross got awfully good at it.
That's right. You can get so good. Ed Thorpe wrote the book called Beat the Dealer, and he was barred from the casinos. He was too good. So you can get good at it. You can turn it into a skill game. But most people who haven't read the book and don't know the theory and don't study it, for them, it's luck, and they go in and they sit there. I don't know. Should I hit 16? Should I stay? And if you don't have the skill, then you shouldn't expect to be able to control the outcomes.
And now let's see what's making headlines across the globe. We have Ritika Gupta of Bloomberg News, who's bringing us the first word headlines.
The US is dropping its designation of China as a currency manipulator, clearing another hurdle ahead of this week's trade deal signing. The Treasury is making the announcement in its semi-annual report, which has been delayed by the Phase 1 negotiations. Critics had attacked the manipulator label, with the IMF saying the yuan is fairly valued. The currency strengthened to 6.883 on Monday. Iran has seen a second night of protests against the downing of the Ukrainian passenger plane. Videos on social media showed unrest in Tehran and other cities, with some clashes between protesters and police. Some social media posts talked of open criticism of Ayatollah Ali Khamenei and called for the end of the Revolutionary Guards. President Trump has continued to tweet his support for the demonstrators. The long-running protests in Hong Kong are prompting more asset managers to consider moving to Singapore. The news adds to signs that the city-state is picking up business at the expense of Hong Kong. That includes a private equity gathering that's shifted to Singapore this year, family office advisors looking at the logistics of the move, and growing numbers of Hong Kong parents considering Singapore schools. And sterling weakened as the UK economy unexpectedly shrank ahead of the general election. The news prompts doubts about whether there was any growth in the fourth quarter at all, and adds to concern at the Bank of England. Policymakers are debating whether further stimulus is needed to support the economy. Bets are increasing on Mark Carney making a cut in his final monetary policy decision as Bank of England governor. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
And now let's take a look at how the trade setup is there for today. We have Darshan Mehta who's joining us for the same. Darshan, what are the cues telling us?
Yeah, so it's positive. The SGX Nifty is indicating a positive outlook. We had a positive close yesterday. The global markets have done well. The SGX Nifty is up almost 30 points at this point of time, indicating that we are headed to new highs. We will open at record highs. So there is positive traction that's happening on our markets. How did we close? They are extremely positive in trade yesterday. The Nifty was up almost 0.5%. More traction seen on the broader end of the market, the mid-cap and the small-cap end of the market also doing well. How did the banking space pan up in trade? Not as much as the Nifty or the broader markets, but nevertheless they traded with a positive bias. So that's the trend. Most of the ADRs did end with a positive bias. Metals yesterday did see a big rally. Vedanta was up 2.5%. Among the banks, HDFC Bank was up 1.5%. So that is where traction was seen. Infosys reacting to the numbers. Wipro and Dr. Reddy's also up in trade. So that's the ADR picture. How did the fund flow pan out in trade? Over the past few days, we have been seeing subdued fund flows. FIs, DIs, both buyers, but very, very marginal amount of funds coming in into the Indian markets. What contributed? Basically, it was Infosys that single-handedly helped the Nifty move up 72 points. So half of the Nifty contribution came in from Infosys. A big rally in the second half of trade was seen in IndusInd Bank. Bharti Airtel managed to close at the day's high. So there was traction. What didn't contribute? So clear pair trade. Infosys on the long side, TCS on the short side. ICICI and Reliance were the other counters which didn't manage to contribute. How did the F&O market pan out in trade? Clearly, if you're looking at the market, the open interest was down almost 0.2%, indicating some bit of short covering that was coming in on the Nifty. The Nifty trades at a premium of 30 points. More short covering coming in. On the Nifty Bank, it was seeing open interest build up down by almost 6%, and the index was up almost 0.2%. So there was traction that was happening there. where are positions being taken? We are at the 12,400 mark. So what we are seeing is that put writers are active from 12,000 up to 12,300. Not too much writing happening at higher levels. That is where call writers are happening. So at higher levels, we may see a bit of resistance that will come in on our markets. How did we end in trade yesterday? Again, because the market rallied 70 points, the 12,200 and 12,300 put writers were much more aggressive. So 12,300 at this point of time seems to be the near-term support that the market is looking at. How did the WIX pan out? The market was doing well in trade, so the WIX up 1.4%, so nothing much there to talk about. The PCR actually moved up given the fact that there was aggressive put writing that was happening, so 1.63 versus 1.54. In terms of stocks that managed to move up, you had Colgate-Palmolive with open interest build up of 14% on the long side. Tires as a pack has done well, so Apollo Tires, Ramco Cement, the entire cement pack because of the price hikes have done well ahead of the and HCL Tech and Castrol were the other companies with some fresh buying that came in. In terms of short covering and long unwinding, there was Jubilant Foodworks which saw short covering. Again, long unwinding that was seen in Max Financial. At HUL saw a bit of short covering in trade yesterday.
All right, Darshan, thanks for getting us those updates. So, well, plenty of cues to watch out there as far as the Indian markets are concerned. But let's move on and we'll take and get a look at all the stocks that have made it in the news. We have Somit Sarkar who's joining us to give us that list. Somit, good morning.
Good morning, Agam. First, let's start off with the earnings that came in, that is Delta Corp. Now, the revenues were flat for the company while the EBITDA was down nearly 7.7%, impacted by higher expenses. The net profit was up 9% due to lower tax rate of 25% as against 36% last year. On the segment-wise, if you see, the casinos gaming revenue was down nearly 3%, impacted by a maintenance shutdown seen for one of the casino vessels, which was shut for nearly 25 days. And on the online skill gaming division, that revenue was up nearly 9%, while the hospitality division revenue growth was flat compared to last year. In other stocks to watch, firstly, Lind India board approved the sale of company's Biloxi divestment business on a slump sale basis for around nearly 55 crore rupees to Inox Air Products. Along with this, NMDC, because they have completed the execution of mining lease agreement of 4 mines in Chhattisgarh. Now, the mining lease of the mentioned deposits are valid up to 2035. IRCTC, because the Ministry of Railway has given the approval to the company to operate Ahmedabad-Mumbai Central Tejas Express. Now, the inaugural run will be on January 17th and the commercial run starts from January 19th, says the company. On bulk deals, firstly, Regal Enterprises, where Ashish Kacholia has acquired nearly 40 lakh shares, and Mukul Agarwal has also acquired nearly 26 lakh shares in the company, while Axis Bank sold nearly 90 lakh shares. And lastly, Reliance Infra, where IndusInd Bank has sold nearly 25 lakh shares in the company.
All right, Samal, thanks so much for getting us those updates with respect to stocks and news today. But we'll move on and talk about consumer price inflation, which showed a spike in December above the Monetary Policy Committee's target band. Inflation was pushed up by around a surge in food prices and an increase in telecom tariffs. Pallavi Nahata reports.
Retail prices have persistently risen over the course of the second half of the last year. Retail inflation surged past the tolerance band of India's Monetary Policy Committee, largely led by food prices. Inflation rose to 7.35% in December from 5.54% in November. This was according to data from the Statistics Ministry that was released on Monday. This was even higher than forecasted. A Bloomberg poll of 37 economists had estimated inflation at 6.7% for December. At these levels, inflation is at its highest since July 2014. Inflation in food and beverages rose to 12.2% from 8.6% in November. Vegetable prices surged to 60.5% in December from a rise of about 40% in November. This was led by onion prices, which rose over 300% from over an year ago and remained the biggest pain point in the food category. But all other food items have also seen higher inflation from the previous month. The other big jump has come from transport and communication, which rose to 4.8% in December from about 1% in November because of the telecom tariff hikes across service providers. Higher telecom costs were a key contributor to core inflation, which rose to 3.75% in December from 3.5% in November. Core inflation excludes food and fuel prices. Most other components which make up core inflation actually de-accelerated in December. The higher inflation comes at a time of weak economic growth and leaves the Monetary Policy Committee with a dilemma. So even while lower growth may need more rate cuts, inflation above the MPC's target demands an end to the rate cut cycle. Sonal Verma and Auradeep Nandi, India economists at Nomura, have said that though they expect these supply-side pressures to subside by the quarter ended June, with GDP growth expected to remain sub 5% according to their estimates, the next quarter is likely to witness stagflation-like conditions.
Well, on to GST now. The government will probe claims seeking GST refunds worth more than 28,000 crore rupees. A government official tells BloombergQuint that 931 cases of fraudulent GST claims were identified using data analytics. Nikunj Ori reports.
Taxman will probe GST refund claims of over 28,000 crore rupees filed or claimed by taxpayers who pay a higher GST on their inputs as compared to the finished goods, which refers to the inverted duty structure under the GST regime. In the current financial year, refunds of over 28,000 crore rupees have been filed by about 27,000 taxpayers, which relate to the inverted duty structure. Remember, in the inverted duty structure, inputs of a product are taxed at a higher rate than the tax levied on the product itself. This decision to scrutinize all the pending and current claims of refund claims by taxpayers which relate to the inverted duty structure was taken after the Department of Revenue has identified about 931 cases where fraudulent IGST claims were made by taxpayers which relate to the inverted duty structure. From July 2017 to November 2019, about 6,641 cases have been busted by the tax department, and about 1,057 crore rupees has been recovered. The maximum number of these cases for ITC frauds were unearthed in Kolkata, followed by Delhi, Jaipur and Haryana. Just for instance, these fraudulent offenders do generally create a series of firms and issue fake invoices and claim input tax credit based on them. Now, this particular case relates to fraudulent claims of input tax credit on products that currently come under the inverted duty structure. And in one example, where the tax department has busted a case in Delhi, where offenders had created a series of firms and issued fake invoices and claimed input tax credit based on them on Hawaii chappals whose inputs are taxed at a higher rate of 18%, and Hawaii chappal itself is taxed at a lower rate of 5%. Over to you.
Well, moving on to earnings, we have IndusInd Bank, which will be the first from the banking pack to report earnings for the December quarter. The lender is likely to report a steady top line and bottom line growth, but slippages and exposure to some stressed growths will be keenly eyed. We have Shefali Malik, who's standing by to give us an update on what can be expected.
IndusInd Bank is expected to report steady set of earnings this time around with a sequential growth in NII of about 4.5%. On a YOY basis, the numbers aren't strictly comparable because of the Bharat Financial merger. Their profit is expected to inch up by about 1.4% on a sequential basis. So coming to the various metrics of the bank, and even before that, it will be the last quarter of reporting for the CEO, Ramesh Sopti. So it will be interesting to see how he ends his tenure, with what kind of numbers we actually see when the bank reports its earnings. It will be interesting to note that. When it comes to the operational metrics, loan growth, that's expected to be around 20% on a YOY basis and 6% on a sequential basis. Now, even though these numbers are strong relative to the system on the whole in comparison to their own historical records, it's a much lower growth rate, primarily because of the slowdown in the vehicle segment. And deposit growth is expected to be around 25% on a YOY basis, 6% on a sequential basis. Apart from that, we'll closely watch out for the asset quality, the slippages from DHFL account that may weigh on the credit cost, and apart from that, slippages from both the corporate and the consumer segments, especially the CV segment, credit cards and LAP. All these will be closely watched out for. Their exposure to the three stressed groups that had already come down to 1.5% 1.1% at the end of second quarter from 1.67% at the end of the first quarter. So we'll watch out for traction on that front as well. Margins are likely to continue expanding mainly because of the high yielding portfolio of the Bharat Financial which they had acquired, and we look forward to the provisioning coverage ratio which remains at about 50% for the bank. Remember, just a few days back there was a report by Bank of America Merrill Lynch which said that the provisioning coverage ratio could actually improve to 60% by Q3 FY20 itself. So if that happens, that may weigh down on the bottom line. So that is one key number that we will be looking forward to.
And of course, Wipro is also expected to report a steady top-line growth, although its profits may decline in the December quarter. To take you through the quarter and what we can expect, starting off with your top-line growth, well, at least as far as your IT services revenues are concerned, we're likely to see a growth of around 2.6%. And well, in terms of your overall revenue, we're likely to see a growth of around 2% as well. We must remember that, well, margins on the whole for Wipro have been volatile. This time around, we can see a little bit of an improvement on a sequential basis. Profits, however, are likely to see a knock around 4.3%, but that's also because of a one-off. Well, moving on, among the key factors, one is the fact that we are expecting about a 2.6% growth, which means that it will very much be in line and perhaps towards the upper end of the guided range for the company for this particular quarter, which stood around, well, $2,065 to $2,106 million for the third quarter. That was a guided range. What can we expect when it comes to the Q4 going ahead in terms of guidance? Well, analysts are baking in about a 0.5 to 2.5% growth for Q4. Of course, to a certain extent, the revenues will be aided by the latest acquisition that the company has made, that's ITI, and that is, of course, going to get in your inorganic growth. Also, well, when it comes to the other factors that we are going to watch out for is, of course, the financial services vertical and how things are panning out, because it's been very stock and company specific in an industry which has been seeing challenges when it comes to financial services. Of course, Wipro has relatively higher amount of exposure to accounts which are seeing some more challenges. That has been evident over the previous few quarters as well, and that may very well turn out for this quarter too. We're going to have to keep an eye on that one. We're also keeping an eye on growth outlook as from clients specifically, perhaps early trends that they can indicate when it comes to spending and, of course, operating margins and the trajectory going forward. But on the whole, because it's a relatively smaller quarter, we may very well see a quiet one. But that said, 2.6% growth in IT services would be considered as a steady quarter for Wipro. But let's move on. The question really is, has the automobile slowdown bottomed out? The Society of Indian Automobiles or SIAM is witnessing a trend reversal in the passenger vehicle segment. And Nishant Sharma spoke to Rajesh Menon, the Director General of SIAM, and here is a slice of that conversation.
The last few months in the area of passenger vehicles and also in the area of three-wheelers, we have seen what I would call trend reversal. There is still degrowth, but it's much lesser degrowth compared to what we had in the past few months. This is largely in the case of both passenger vehicles and three-wheelers. But both commercial vehicles and two-wheelers, we are continuing to see major degrowth. So that worries us even now. So passenger vehicle and three-wheelers, as I said, there are reasons for it, but there is a trend reversal happening. In the case of passenger vehicles, many new models have been introduced in the market, which have seen a very good response. The SUV segment has done much better in the past. So in fact, if you see the proportion of passenger vehicles, SUVs are much more than what has been the past many years. So from a model perspective, we've got new interesting models which have attracted attention from consumers.
Right. And what are your expectations from the government as far as the budget is concerned now?
See, as of now, there are two things. One is, of course, we need to revive demand, especially in commercial vehicles and in two-wheeler segment, which is continuing to see major signs of degrowth. We need to revive demand. And second is there is a big challenge coming up, which is the transition to BS6, which will be effective 1st of April. So there are a couple of things which we have been making requests. So from the aspect of revival demand, we have, of course, requested government to look at coming out with a scrappage policy, which is incentive-based, where you incentivize consumer to buy a new vehicle against monetary incentives, which can be from the government, which could be provided from the government as part of the budget. So that is one request which we have sent to the government. So you incentivize him to buy a new vehicle as against an old vehicle. Second is, we have said the government could consider doing a major program across India where the state transport undertakings could be given appropriate budgetary allocation so that they can procure buses. So that will revive and create demand in the commercial vehicle segment. That's second. And third, we have said because of the transition to BS6, there will be an increase in price.
Right.
And to neutralize that increase in price, we should look at a GST reduction for all BS6 vehicles from 28 to 18%. So these are three major suggestions we have made to the government. In addition, as far as the BS6 transition is concerned, we have made a request that the BS6 fuel, which is a very specific fuel with very low sulfur content, be provided by February itself, so that more and more products which are BS6 can be introduced in the market. So
Right.
these are our key recommendations and suggestions to the government.
And with that, it's a wrap on this edition of All You Need to Know, but stay tuned to BloombergQuint for more news and updates.